The US drone sector has indeed moved to the forefront of the investor attention in 2026, driven by a triple threat of catalysts: a massive shift in the Department of Defense (DoD) procurement strategy, the maturation of the AI integrated commercial workflows, and a favorable technical setup in many pure play stocks. So while the broader market, right, has seen a rotation away from the AI hyperscaler, the capital is finding a home in the physical AI, robotics, and the autonomous systems where drones are the primary beneficiary. So the defense catalyst. So from planes to bullets, and also the commercial maturity, the DaaS defense as a service model, and then the key takeout and the performance of March 2026, which is some area that we will be covering later in the video. So, okay, the risk to watch. So basically, with the risk to watch, the first point will be the valuation friction. Many pure plays like KTOS and AVAV are trading at a significantly elevated forward PE multiples. Some are near 180 times. So leading analysts, right, to warn of a gap between the momentum and the fundamental fair value. So the next point will be the regulatory speed. While the FAA Part 108, right, the BVLOS is a major tailwind. Any delays in implementation could stall the commercial DaaS growth narrative. So in the attached video, right, we will be going through the breakdown of the latest indicators for Ondas Holdings (ONDS), and also the technical comparison between Red Cat versus the AVAV stocks. So since ONDS has its final Q4 earnings call tomorrow, 25th of March, pre-market, right? We will be also looking at the expected move and the implied volatility, the IV analysis, and the put call sentiment. So for the summary strategy, right, the squeeze is actually set with the Bollinger Band, right, tightening, and an expected move of 12.7%, a bit and rise tomorrow morning, right, could easily push the stock back towards the $13.25 resistance level. Conversely, any disappointment, right, in the adjusted EBITDA, which is still showing losses, could see a test of the $9.50 floor. So appreciate if you could share your thoughts in the comment section, whether you think that it is a good time for investor to look at drones sector for possible rotation. Then a disclaimer: the analysis and result, right, presented does not recommend or suggest any investing in the state stock. This is purely for analysis purpose. So while the broader market, right, has seen a rotation away from the AI hyperscaler, the capital is also finding a home in the physical AI, robotics, and autonomous system, where drones are the primary beneficiary. So as mentioned earlier, so let's look at the defense catalyst, okay, which is from planes to bullet. So the most significant shift, right, is the Pentagon replica initiative and the drone dominance program, which treat drones as an expendable mass rather than the expensive and long-term assets. So the next point we're looking at will be budgetary momentum. For financial year 2026, right, the DoD requested over 3 billion specifically for counter drone capabilities, along a nearly 20% increase, right, in the research, development, test, and evaluation RDT and E funding for the unmanned system. Okay, so the next point we're looking at will be the scale and volume. So small cap players like Red Cat, the ticker RCAT, and ONDS has actually seen significant dramatic momentum after securing slots, right, in the army programs. So with some seeing preliminary revenue, increases exceeding 1000% year over year as they expand the manufacturing to meet the speed and volume requirements. So the next part we'll be looking at will be the commercial maturation, the DaaS model, defense as a service model. So drones are no longer viewed as a experimental hardware. They are being integrated as a drone as a service, DaaS, within enterprise digital twins and also the asset management. So the BVLOS approval, the 2026, right, is a turning point for beyond a virtual line of sight, which is the VVLOS regulations, allowing drones, right, to scale in logistics, agriculture, and also the infrastructure inspection. Okay, the next one we'll be looking at the AI age. So autonomous drones right now featured onboard AI for real-time decision making, obstacle avoidance, and also the data processing, which has actually attracted investors, right, looking for applied AI plays beyond the software layer. So coming to the critical and performance, right, for basically March 2026, right. So investors are actually rotating into a mix of pure play growth stock and industrial stalwart value play. So as in the chart, you can see that we have some typical like the AVAV, which is basically a pure play, and then for 2026 status, right, it's actually high momentum. The key driver is actually a switchable switchblade loitering munition 1.1 billion backlog. So the next one will be the KTOS high growth status will be high valuation for 2026. And then the key driver will be the XQ58 Varec Loyal Wingman and the Hypersonic. So for the next one will be RCAT. Red Cat is a small cap for 2026 status. It's a high risk and reward Army short range reconnaissance SRR contracts. So on this ONDS infrastructure, speculative AI-powered connectivity between the backbone and for drone fleets. And then the last one will be the BA and the NOC is industrial for value and for income. So the MQ-25 refueling and then the long endurance maritime drones. So for this, right, the risk to watch, actually, you can see the valuation friction. So many of the pure plays like the KTOS and the AVAV are actually trading at a significant elevated forward PE multiple, some near the 180 times, leading analysts, right, to warn of a gap between the momentum and the fundamental fair value. So the next one will be the regulatory speed. Basically, while the FAA's Part 108 BVLOS is a major tailwind, any delays in implementation could still stop the commercial DaaS growth narrative. So now coming to the breakdown of the latest indicators for ONDS. So as of 24th March, right, 2026, right, Ondas Holding ONDS actually shifted from its aggressive overextended state, right, seen earlier in the year to a period of consolidation and also cooling. The technicals actually suggest a stock that is currently searching for a floor rather than being dangerously overbought. Okay, so here is the breakdown of the latest indicator for ONDS, as you can see in the chart. Okay, so basically the indicator on the RSI 14 days, right, the value is actually at 40.35. So this interpret as a neutral bearish bias. It actually has fully cooled off from the 70 plus overbought levels seen in January. So it's currently closer to the overbought boundary at 30, and then the oversold boundary at 30, and then the overbought one at 70. So next we look at the MACD at 12, 26 and 9 period. So it actually at a value of negative 0.123. So it's the interpreting it as a bearish. So the MACD line is actually currently below the signal line, indicating a short-term downward momentum. However, the histogram might actually show the selling pressure, right, may be compressing or levering off. So for the Bolingo bands, right? So looking at $9.63 to $11.20, this is actually interpreted as a consolidation. So the price $10.90 at the last close, right, is actually trading in the upper half of the bands. So the bands, right, actually had tightened significantly, right, compared to February, suggesting a volatility squeeze, right, is forming. So as for the key price level and structure, right? So the chart is actually currently forming what some of the analysts describe as a high level compression or a potential bull flag. So on the support side, we can see that immediate support is actually sitting at $10.21 on the 20 days moving average, and a harder floor at $9.49. So a break below the $9.49, right, would be a significant sell signal. So resistance wise, right, the stock is actually facing a descending resistance line around the $11.20 to $11.50. So on the trend, while the 1 year return is a staggering 1,242%. So the 1 month trend is slightly negative, so negative 1.47%, showing that the rotation capital is actually being patient rather than chasing. So the next one we look at will be the near-term catalyst. So earnings tomorrow, pre-market. So a critical factor for your technical setup is the Q4 earnings report scheduled for tomorrow, March 25th, 2026, before the market open. So for the expectation, revenue is forecasted to jump significantly, up to 380% year on year, based on the recent defense contract wins. So on the implied move, right, the options market is actually pricing in an expected move, right, of plus minus 1.33 dollars, approximately around 12.8% by the end of the week. So the verdict, right, ONDS is not overextended right now. In fact, it has successfully reset its technical indicators. So it is currently in a high state wait and see mode ahead of tomorrow's earning. So if the report were to beat expectation, so the tight Bolingo bands, right, will suggest the breakout could be explosive. So as of March 24th, 2026, right, both RedCat, RCat, right, and Aero Environment, AVAV, right, are showing significant cooling patterns, but they are actually doing so in a very different way. So while ONDS is actually consolidating in a very neutral zone, right, AVAV has actually entered a deep technical correction, and RCAT is actually experiencing high volatility chum following its recent all-time highs. So for the technical comparison, as you can see in the table, right, we can see that the indicator for the current price, RCAT actually suffered a down from its 18 plus peak by closing at $13.25, and AVAV was also down from its peak at 417 peak to 997.72 cents. So RSI 14 days, the RCAT actually came in at neutral at 46.8, and AVAV was in the oversold territory at 33.3. So for the MACD, it's actually seeing a bearish crossover for the short term, while Aero Environmental AVAV, right, is actually having a strong sell, deeply negative at negative 3.53. So for the Bolingo band, RCAT is seeing white and volatile. For the AVAV, it's actually expanding downwards. So for the trend status, for RCAP, we will be looking at it as a high level chum blue flag. For AVAV, it's actually an intermediate term downtrend. So on the AVAV, right, it's actually a deep correction play. So AVAV is actually currently the most cool off of the major drone stocks. Though it leans towards a strong sell, right? Technical rating in the immediate term. The setup, it has actually lost nearly 50% from its January high. So the RSI is actually hovering just above the 30, suggesting that it is becoming fundamentally and technically oversold. On the support and resistance, right, it is currently testing a major psychological and Fibonacci support level at $194 to $197. So if it failed to hold the $190, right, so technical analysts, right, see a head and shoulder completion that could trigger a slide towards the $128. So on the investor sentiment wise, right, negative volume balance actually indicate that the institutional investors has been the primary sellers during this rotation. So okay, so now coming to the next one will be the RCAT that we mentioned up earlier. It's actually a volatility chum play. So unlike AVAV, RCAT remain in a macro bullish structure, but it's actually undergoing a volatile shakeout of the retail traders. So the setup, right, after breaking its all-time high of $16.90 earlier in March, right, it has pulled back sharply to the $13.25 level. So the RSI has reset from a 80 plus extremely overbought to a much healthier 46.8 level. So for the blue flag potential, many traders are actually watching the $12.90 level as a critical line in the sand. So if it stay above this, right, the $12.90, right, the current pullback will look like a massive bull flag consolidation before a run towards the $20 plus. So for the backlog catalyst, right, so the cooling technicals are at odds with the fundamentals. So the company is still slanted for the $125 million in revenue for 2026, driven by the SRR2 Pentagon contract. So for this, the summary strategy, right? So ONDS is the most stable of the three, waiting for its earning catalyst tomorrow. So AVAV is actually a falling knife, but approaching a massive historical support level for those looking for a value entry in drones. So RCAT will be more for the high volatility trader. It has cooled through enough to remove the danger of chasing, but require a strict stop loss at $12.90. So now for the final Q4 earnings call on the March 25th, 2026, right? The option market is actually pricing in a significant volatility event for Ondas ONDS. Despite the stock cooling off technically, right, the option chain revealed a high conviction bet on a double-digit percentage move. So here is the data, on how the market is actually hedging. So first we look at the expected move. So based on the at the money ATM standard for the March 27 expiration, the closest weekly cycle, which is this Friday, the market is actually pricing in an expected move of plus minus $1.24 cents per share. So this represents a plus minus 12.7% price swing from the current $10.90 level. So the context wise, right, this is roughly 3 times the typical daily volatility for Ondas ONDS, suggesting that while the technicals have reset, the market expect the earnings, right, commentary to break the current consolidation. So the next one will be the implied volatility IV analysis. So current IV, the 30 days implied volatility is sitting at 113.8%. So for the IV rank, interestingly, this is the only in the 6% percentile for the year. This means that Ondas ONDS, right, is actually usually even more volatile than it is right now. So traders are actually buying these relative cheap options to hedge against a massive surprise. So For the IV versus the HV historical volatility, right? So implied volatility at 113.8% is currently trending slightly above the 20 days historical volatility at 111%. So a classic sign that event risk is being priced into the premium. So the next point will be look at the price, the put and the call sentiment. So the option flow show a distinct bullish tilt to heading into the call. So volume wise, the put call ratio is at 0.48. It's actually more than twice as many calls being traded as put. So open interest maximum pain, right, will be at $10.50. The stock is currently trading slightly above the maximum pain. So meaning that the market makers, right, will benefit most if the stock were to stay near its current level. But the volume is heavily skewed towards the $12 and the $13 call strikes. So the next point or the last point will be why the market is actually hedging for the upside. So basically the primary driver for the high IV inverse implied volatility and then the bullish call volume is the reverse preliminary data released on March 20th. So revenue beat. So management already raised the Q4 revenue guidance to 29.1 million to 30.1 million, up from the 27 million. So for the cash position, the company has actually a massive cash pile of 1.5 billion following its January capital raise, leading to speculation about further M&A is in the drone space, like their recent acquisition of Worldview. So on the summary strategy side, so the squeeze is actually set with the Bollinger Bands tightening and an expected move of 12.7%. A beat and rise tomorrow morning could easily push the stock back towards the 13.25 resistance level. Conversely, any disappointment in the adjusted EBITDA, which is still showing losses, could see a test of the $9.50 floor. So here's the disclaimer. Yeah, do note that the analysis and the result presented, right, does not recommend or suggest any investing in the state stocks, and then this is purely for analysis purpose. Hope you like the video, and then you could help to give us a comment and also help to share.